a longtime member of the board of directors of PPIC, and I want to welcome everyone to the Bechtel Conference Center for this conversation about the crisis in California's housing market. A special welcome to our special guest, Attorney General Harris. As most of you know, Kamala Harris was sworn in as Attorney General in January of this year. Previously, she served for 2 terms as District Attorney here in San Francisco, and we're delighted to have you back at PPIC, Attorney General. This is exactly the kind of event we envisioned when PPIC designed this center with the support of the Bechtel Family Foundation. The center's been open since March, and we've been using the space to broaden the conversation about critical policy issues in California, everything from economic development to the health care situation, as well as water policy. Today's event is part of PPIC's 2011 speaker series on California's future. And I'd like to take just a second to thank the sponsors of this series for their underwriting support. It includes the Stewart and James Irvine and Pacific Life Foundations, as well as San Diego Gas and Electric, Union Bank, and McKinsey and Company. The series is also funded by contributions of unrestricted support from PPIC's donor circle. Before we get started, just a couple of brief requests. First, before you leave today, please take a moment to fill out the confidential evaluation survey and leave it in the basket as you depart. And secondly, of course, if everybody could turn off their cell phones. Let's move on to the program. We're going to first hear from Hans Johnson, who is with PPIC, who's going to give a brief overview of housing in California. Next, we're going to hear from Attorney General Harris, who's going to make brief remarks and then be joined by PPIC's President and CEO, Mark Baldessari, for a conversation about California's mortgage meltdown and the response from the Attorney General's office. So I'm pleased to introduce Hans Johnson. He's the Bren Policy Fellow at PPIC. His work at PPIC focuses on higher education, population trends, and demographics, and housing. So, Hans, welcome.
Good evening. Well, it is hard to overstate the importance of housing in California and the United States. Certainly, the ongoing recession, or technically the recession is over, but it certainly doesn't feel like it, was precipitated to a large extent by housing and the housing bust that has occurred over the last few years. What I'm going to do very briefly is provide you with an overview of California's housing market, where we've been, where we are today, and some indications of where we might be headed. So where have we been? Well, it is important to keep in mind that housing and housing construction on all the kind of industries related to housing are extremely cyclical. This is true for many decades. And it is more true in California than in the rest of the nation. California is at the forefront of growth, and that means that we are often also at the forefront of decline. It's also important to keep in mind that not too long ago, in fact, just about 5 years ago, we were talking about a very different housing crisis in California. And that crisis was one of high and rapidly increasing prices, lack of affordability, and new housing construction that was not keeping pace with demand. And in fact, we had policies designed to encourage new housing construction. Let me throw out some statistics. Between 1996 and 2006, the median housing value in California increased over threefold from about $150,000 to over $500,000. This is statewide. Places that were already expensive became even more expensive. The San Jose metropolitan area, for example, increased its median values from around $225,000 to almost $750,000 by 2006. And places that were inexpensive became expensive. In the Inland Empire, that's San Bernardino and Riverside County, a metropolitan area of 4 million people, excuse me, prices increased from less than $100,000 in 1996 to $400,000 by 2006. And many of us were asking, how is this possible? who is buying these houses at these prices? Well, PPIC issued a report in 2005 during the height of the housing boom. And the name of that report was California's Newest Homeowners, Affording the Unaffordable. And what we found in that report was that many families in California of modest incomes were buying quite expensive houses. And that raised some red flags for us. And in that report, tooting our own horn here and partly selectively choosing quotes from the report, but not entirely, this was the gist of the report, we wrote, there is something new in the latest run-up of California's already staggering housing prices. It is the financial lengths to which buyers are willing to go to buy a home and the willingness of banks and lenders to accommodate them. Alternative mortgages, including interest-only adjustable rate mortgages and high loan-to-income ratios, have led to a greater financial burden with respect to housing in California than in any other state. That burden is particularly acute among recent home buyers, placing them in a vulnerable financial position. Many home buyers lack full information about their loans and may be unknowingly affected by fluctuations in the broader economy and unprepared for sizable increases in future monthly payments. We issued that report during the height of the housing boom, before the bust began, and unfortunately, many of those concerns have been realized. So where are we today? Well, prices and values have declined statewide by over 40% to a median now of a little over $300,000 from over $500,000. Inland areas of the state have been especially hard hit. They were the locus of the growth. They are the locus of the decline. Median values in places like Merced, Modesto, and Stockton have fallen by over 60%. Adjusting for inflation, homes in the northern San Joaquin Valley are worth less today than they were in 1996. According to CoreLogic, almost 1/3 of California homeowners who have a mortgage are underwater. That means they owe more than the house is worth, and that ranks California 5th highest among the states. Foreclosure rates remain very high. Foreclosure filing rates in California are more than twice as high as in the rest of the United States, and almost half of houses sold in California are distressed sales, meaning they are either short sales or foreclosed homes. Housing construction remains anemic. We are on a pace now for a third straight year of fewer than 50,000 new housing units to be built in our state. This compares to during the height of the housing boom when we were building around 200,000 housing units per year. So most of the news right now is not good. At best, we are bouncing along at the bottom. Where are we headed? Well, there are some silver linings, and there are some indications that we might expect strong and increasing demand for housing and home ownership going forward. So we were fairly good at prognosticating perhaps the decline. So now I'm going to tell all of you to go out and invest in Merced. And I'm only being partly facetious. First of all, homeownership remains very popular in California and in the United States. The vast majority of people who live in our state, and including renters, want to own their own home. Second, houses in California are the most affordable they have ever been, or at least since we've been keeping records. Low prices and low interest rates mean that in 23 of the state's 28 metropolitan areas, over half of all families can afford the median-priced home. And even in the San Jose metropolitan area, our most expensive metropolitan area in the state, high incomes and low interest rates, and those high incomes are true even during this recession, mean that over half of households can afford the median-priced home. In California's inland areas, affordability is even more widespread. For example, in Merced, median values are about a little over $100,000, and almost 90% of families can afford the median-priced home. What do you get for that in Merced? You get a 4-bedroom, 2.5-bath house on a quarter-acre lot built in 2006 at the end of a cul-de-sac, and your monthly payments are a little over $600 a month. It is cheaper to own than to rent in many areas of California, including in all but one of our 8 largest cities, and that one exception is San Francisco. According and then finally, demography is also on our side, as demography often is. Not only is the state's population continuing to increase, unlike some other states that are experiencing tremendous housing problems, but the largest increases ahead will be among the echo of the baby boom. That is, young-ish adults in their 20s and 30s who are at prime ages for starting their own households and driving up demand for housing. Still, the future is uncertain. We have large numbers of homeowners who are underwater, more foreclosures, as I said. Certainly the macroeconomic conditions with high unemployment rates, a lack of consumer confidence are big obstacles to increases in demand for housing in the future. But I think that there are a lot of positive signs about where we are right now. So my goal in this quick temporal overview of housing in California, I think, reminds us all not to be too optimistic during the booms and hopefully not to be too pessimistic during the busts. Now, I would like to invite to the podium the Attorney General of the state of California, Kamala Harris, and thank you very much for being here today.
Thank you. Thank you. Thank you, Hans. I first want to thank PPIC. I often find myself relying on the data that you generate. We can always be sure that it is well thought out and researched and presented in a way that does, I think, move forward good public policy. So I just want to thank everyone who is here and for your support of PPIC and in that way supporting those of us who hold these offices. You said it, Hans. I mean, you talked about the data, you talked about the statistics. I can tell you in the first 9 months of being your Attorney General, I've been on some weeks about 6 planes a week, and I've been going to places like Fresno and Visalia and Los Banos and El Centro and Redding and Crescent City and Shasta and many, many places around our great Golden State. And most of them are not what we're seeing in San Francisco. And in many of those communities, we are seeing struggling families and blight and despair. What we know is that home ownership really is the very basic investment in this thing we call the American dream. And so when people are at risk of losing this home, this thing that represents to them everything that is about the promise and ideal of our country, and everything that represents to them what it means for them to have become and have participated as a productive citizen and as a productive resident of our state. We know that we are facing troubled times. We know that most people and their purchase of their home is the most intricate and complicated and complex financial investment they will ever make. It represents for them their retirement. It represents for them their college education for their children. It represents their dream. So when we talk about the issue of the crisis we are facing in California as it relates to home ownership, as it relates to foreclosure, we are talking about something that is not only an issue that is empirical evidence of an economic decline and something that not only is an issue in terms of how we will correct markets, but it is also about how it impacts the general populace in terms of their psyche and their ability to believe that when they do the things that we suggest they should do to follow the rules, such as hold down a job and buy a home and pay your bills on time, there's a certain level of depression that is beyond the economic depression we talk about. And so when we're seeing it nationwide, you've touched on the California statistics. We believe that in 2010 there were nearly 4 million foreclosure filings reported in the country. We have estimated that by 2012 the foreclosure crisis will strip homeowners in neighboring homes of about $1.9 trillion in equity in terms of the value of their homes. In California, I had been for the last several months talking about the shame that California has 5 of the top 10 hardest cities in the United States that were hardest hit by the foreclosure crisis. Well, as of last month, we now have 8 of the top 10. What we are looking at in California, as you mentioned, we've got 2.2 million homeowners in California right now who are underwater. 2.2 million homes with families that may be 1 person or 5 people that are underwater and literally holding on by their fingernails to stay in that place. And so the magnitude is quite enormous. We estimate that last year alone there were 550,000 filings against California families for foreclosure. And the statistics also tell us that about 1 million California children are living in those homes. When we look at the conduct that is associated then with this epidemic, if you will, with this situation, and when I look at it as a prosecutor, I look at it and see a number of areas of conduct that should be addressed and discussed. When I was district attorney, I actually created, and our team, many of whom are here still, created what one of the, well, actually the first standalone mortgage fraud unit of a DA's office in the country, and that was several years ago. And at that time then, several years ago, we were seeing issues that relate to predatory lending. We were seeing issues that relate to reverse mortgages. We were seeing issues that relate to subprime lending, right? Because that was at the time when we were still facing that boom. And so predators that ranged from brokers to financial institutions were seeking out individuals who would be open to or seduced, frankly, by very favorable terms around what they could get in terms of cash or what they could get in terms of a home. And then when I took office in this year, 2011, we saw a very different California. And so we created in May and actually rolled it out, a mortgage fraud strike force. And I created this unit around the best and brightest from our consumer fraud division, corporate fraud division, and criminal division, 30 individuals, both lawyers and sworn officers, to do the work of looking at what is going on in California at every phase that the consumer, frankly, experience. So that would be from origination, well, frankly, securitization, to origination, to what is happening in terms of foreclosures and what is happening in terms of modifications. And this group has been doing very, very important work. In fact, most recently, in terms of any public announcements that I can share with you, we just announced a case involving a claim and filings that we submitted against a series of law firms, attorneys who were charging homeowners anywhere from $4,000 to $10,000, suggesting that if they paid the attorneys that money, they could join a lawsuit against the banks. So in that situation, colleagues of mine, lawyers, who were engaged in predatory practices and attempting to profit financially over the emotion that a lot of homeowners are feeling about the banks. We have seen cases in terms of the work that we are looking at that range not only from the misconduct of attorneys, we're looking at brokers, we're looking at loan institutions, we're looking at those who run and do the work in title companies as well as escrows. The amount of conduct that we are talking about is wide-ranging, is the point. And at every step of the game, at every step of the process, there should be some level of attention given to the experience that the consumer has, which in most cases is, we're talking about an individual who really does not understand the system, does not understand the enormity of the consequence, and does not understand how to really access relief that should be available to help them in these very dire situations. So, that is what we have been looking at in terms of the work I've been doing as it relates to proactive, if you will, work around litigation on specific cases. There is a whole other area of work that we are doing as well, and that has to do with discussions with the banks at the level of the multi-state conversation that California is participating in along with 49 other states. And we are having those discussions with the banks about what we can, and my perspective, what we can bring back to California in terms of relief for the homeowner. So I was actually in Washington, D.C., and meeting with the banks in a big law firm conference room on Friday of last week. And the issue there is complex. The nature of these conversations is mostly confidential, so when you come up here and ask me questions, I may not give you a whole lot of detail, but generally speaking, I will tell you that my perspective, being in those meetings, is that California was uniquely harmed by what happened in our country. And I want to make sure that California receives the relief to which she is entitled, recognizing that this is an issue that is not like when I was DA, where it would be a negotiation and a conversation about what do you do around punishment and restitution for a murder that took place, right? This is not that conversation, because what we are talking about right now is a process that is dynamic. Every single day of conversation and delay, every single day, we are talking about specific homeowners that will lose their home. And in that way, we have to take seriously not only what must be punishment and consequence and accountability and restitution, but also take into account what must happen on a time frame that works to get the greatest relief for the greatest number of people. And so those are the broad strokes of the work and the climate. And Mark, why don't you come up and then we can get into much more detail about it. Okay, good.
Visiting with us as our Attorney General.
Thank you.
Last year, you were part of our 2010 series of meeting with the candidates. And I'm happy to say that every candidate we met with has gone on to win.
Ah,
And so you were...
put that in the bulletin.
That's right. But of course, my colleagues know that we met with all the candidates, Democrats and
That's funny.
Republicans.
Uh-huh.
But, you know, and when we met last year, there were other issues that were on your front burner. But obviously, when you came into office, you said, you know, housing is a big issue. And as I mentioned to you, I was just returned from Washington, and every office I went into from our representatives said, you know, what do you know about housing at PPIC, and what can we do about it? And so there seems to be really now a growing recognition among policymakers that housing is really going to be critical to having an economic recovery in California as well as in other states. So as you traveled around the state and did the work that you did leading up to what you're now involved in, can you tell us about what were the things that you saw about housing that you thought were absolutely critical for the rest of us to know about the housing market in California today?
Well, one of the issues is the statistic that you've heard about 2.2 million Californians are underwater, right? So we're talking about a lot of people who are in a moment of crisis, and their fate could go either way. So then that presents the question, and I think the issue for all of us: what can we do to be as helpful as we can to those folks? And you know, so for example, in the multi-state and the discussions that you're reading about in that context, we're looking at everything from mortgage-backed securities that may not have contained the value as presented to the investor, to what we're looking at in terms of origination and what was the homeowner told at the time that they entered into the loan. What document did they sign, and was there any correlation between the document they signed and what they understood or believed to be the terms of the loan? And my perspective, representing California, is that our biggest issue, our most immediate issue, is the borrower-facing conduct, as opposed to the investor-facing conduct, right? So in a place like New York, for example, where they have probably less than 200,000 people who are currently under water, the concern that they have in terms of the immediate priority may be a little different from ours.
Right.
All of the issues being important, but when we look at, you know, and again, I'm a prosecutor at my core,
Yes.
so when we're talking about this, it's about not just simply looking at conduct and then saying what's the value of that, or what is the harm with, or what is the conduct, how do we measure that? It's not simply that. It's not just about looking at the act, but it's looking at the harm caused by the act, right? Does that make sense? So if I fire off a round of a gun, that's one conduct, right? And you could say that's the conduct. Let's say that was illegal, period. Well, no. But it matters whether the bullets from that gun hit one person or 10 people. And was there a police officer in there who was in line of duty? Was there a baby, right? The conduct alone does not measure the seriousness of the impact.
Yeah.
And how we perceive it in terms of the priority and the type of response that it would be appropriate.
Right. And as you look at the conduct and what's taken place over the past few years as a result of the conduct, for those people who are California homeowners today, and we've picked this up in our polls whenever we've asked the questions. They have a lot of concerns. They're still very worried about the housing market. Should they be as worried as they're telling us they're worried in our polls?
Yes.
They should.
Yes,
And
and
why
I'll
do you
tell
why do
you
you
why.
think that?
I'll tell you
Yeah.
why. You can look, even just the numbers that we've been discussing. Within the last month, we've seen an increase in the number of California cities making an appearance on that top 10 list. A top 10 list I think we'd like to avoid being on, right?
Yes.
Well, you can look at the numbers and you can see that there is, in fact, a surge, an increase of 96%, I believe, in California, and the number of people who are for whom there's been a filing of foreclosure. Fresno being the hardest hit, and then Sacramento being very high there too. There's been a surge that's relatively recent, and then you look at further information. The average amount of money that the average California homeowner is under is about $93,000. So each day is not equal in terms of how this thing is playing out. And frankly, that's my perspective again when it comes to our position in the multi-state. Each day is not equal. California continues to be harmed. And recently, it seems that there's been an exponential growth in the number of filings, and we have to take that seriously.
Do we have any idea why there's recently been such a growth in foreclosures? Is there anything that, in terms of either bank behavior or the economy, that would point to why this is seems to be picking up steam rather than abating at this stage in our economic, our so-called economic recovery, which hasn't been much of a recovery?
I think that there are different priorities. And, you know, some might think that perhaps the priority for the banks is to satisfy the concerns of their boards. And some would say that the priority of the California Attorney General is to satisfy the concerns of California homeowners. So we're kind of in a different place. And when you look at it in terms of what can be done to fix the situation and the problem, there are many components to that in terms of the way it looks. I look at it from the perspective of what can we bring back to California homeowners in terms of meaningful principal reductions. I look at it from a perspective of what will be meaningful reforms of the process so that in the future we will have standards and an industry standard, either because the industry has agreed and probably because there is also legislation that outlines how this process will occur. So for example, the issue of dual track. You may have heard there's so many stories out there of people who are being foreclosed, who are being told that they can modify, right? So they can basically stay in if they do these other things. And in good faith, they do that other thing on the track of modification. I've heard countless stories. People went out and borrowed from their in-laws and their cousins and their family. Help me, this is the way I can keep my home. But there's no conversation happening. And so the foreclosure, then when they're on the good faith path to modification, foreclosure happens, they're out of a home. And so there is the component of what we're talking about going forward that is about reforms in the system. And I think that needs to happen. There's another issue, which is, again, it's about restitution. For those families that have lost their home, what should they receive in terms of some meaningful restitution? And so these are all issues that I think need to be discussed and addressed.
Yes. So, you know, I've read a number of articles recently. There was a piece in the LA Times over the weekend about the importance of California in the multi-state agreement, and there have been other, you know, articles and pieces written about what's going on. This has got to be one of the most complicated and important negotiations that's happened in the nation's history. And I know that you can't talk about the specifics, and we certainly don't want to do anything today that's going to make that a more complex process than it already is. but it might be helpful for people to, understand what it's like for the 50 attorney generals of the states around the U.S. to get together, and which I know that there's an association of attorney generals, and
Right.
so there is a place where you at least all meet and get together at this point. But the states are so different. They've all been impacted differently. Some are led by Republicans, some by Democrats in office. You've got the overlay of what the federal government's doing.
Right.
You've got the banks that were, rescued through TARP, now being the target of, investigations and allegations around these issues. So what can you tell us about what what this process is like, and what the focus is like in
Yeah.
being involved in something that's important? Because I think, given that housing is so important to people, it's good to know that something is being done. So what can we
Yeah,
what can
so-
we take away from what's being done now?
So the multi-state is the term of art. There have been many multi-states. This one happens to be about the mortgage issue. And so the multi-state is a term of art that refers to multiple states joining together with a common purpose and agenda. And this multi-state and the discussions have been going on for about 11 months. I've been in office about 9 months, and so I've been actively involved for about 9 months. And it has been, from my perspective, a process that has been very deliberative. It has been about gathering the data and the information about what happened in California. It is about taking seriously and in good faith representations that are made by the banks around what they would be willing to do. I'll tell you that one area of success that I think everyone should feel good about is over a period of that many months coming to an agreement about meaningful reforms. That actually has been good. I'd like to believe that those would be implemented regardless of whether we reach a settlement. It has been a process of looking at the issue of what should be the dollar amount that is associated with relief, and then looking also at what will happen in terms of, for example, principal write-downs. And and the process is interesting because everyone is there as a together as a multi-state, but we also are distinct in the way we have experienced this and our perspective in terms of what we can do. And my perspective has always been that California was uniquely harmed. It's kind of like they sneezed and we caught a cold, and so that's something that we have to look at. And then my perspective is also includes, again, perhaps because I'm a prosecutor by trade and nature, I like to see the evidence. I believe that there should be, I want to know that we are engaged in a meaningful investigation. It is my bias, at least as it relates to other cases I've handled, that I'm reluctant to strike a deal where I haven't seen the evidence.
So you also, during your remarks earlier, noted in so many words that time is of the essence. That every day that goes by there is some harm that's done to somebody who is going to lose their home, or certainly all of the uncertainty with the economy and so forth. And time is
Ticking.
always, and it's always, there's a political dimension to time also. Elections are next year. But I think more importantly, people feel like this economic recession and the housing component of it has gone on way too long.
Right.
So can you give us some sense about what the time frame might be like that one might hope for in a best case scenario? Because at the same time, you point out, and I think rightfully so, that collecting the facts and evidence, very important, but we know, I hear every
Time
day
to do that.
from my researchers, it takes time. I need more time.
That's right.
To gather the data. I'm not ready for my report yet, So how do you balance those things?
You hit it on the head, Mark. You hit it on the head, and that is the issue. The issue is looking at what is being offered and deciding if that is adequate to justify overlooking the other process that is available to us. You know, I set up our mortgage fraud strike force so that, you know, that many months ago, so that when and if necessary, we will have an independent engine in California to deal with this. And so I am prepared to do that if necessary. But I do take very seriously, which is why we have been engaged in this discussion for this many months, the reality that if we could engage in a meaningful discussion that would bring meaningful relief to California homeowners, meaningful relief, then that's something we should take seriously.
So when you set up the mortgage fraud strike force in May, I
Yeah.
believe, and at the same time
Well, we
there was
announced
this,
it in May. Actually, it started before.
it started
but yeah,
earlier.
yeah.
So at the same time there was a parallel process going on with the multi-state effort. So could you tell us about how the work of the strike force is similar and different in its focus from what's going on in the multi-state level and what you hope to accomplish?
So the mortgage fraud strike force, actually, I'll tell you that a couple of the people who are the leaders of the mortgage fraud strike force are actively involved in the negotiation discussions, in the settlement discussions. But the role of the strike force itself is to do the work that, for example, we're doing in the Kramer-Kaslow case, which I described, which is the law firm, to doing the work that we are doing up and down the state, which is other investigations that I cannot talk about, but that involve everything from conduct that relates to investors, to brokers, to attorneys. And it is a team that is also staffed with some of the best litigators in my office. And so when it is necessary to issue subpoenas, when it is necessary to look at filing a case with an expectation that it may go to court and go to trial, we have built that into that team. So that team is capable and prepared to take on everything from what I have shared with you to other things.
Right. So in terms of the types of fraud that you'd be investigating in your strike force, it would be everything from the securitization and the robo-signings, the so-called robo-signings for foreclosure, as well as these
False claims,
these-
you know, California happens to, we have a very strong False Claims Act in California. It's one of the strongest tools that we have if you do a comparison of nationally, the tools that various AGs have. So that there's the origination, there's securitization, false claims, and then everything that we're talking about in terms of looking at, again, reforms and then restitution, and also legislation and public education. It was my experience before, and it has been my experience now, that in order to have a meaningful impact, there is certainly the carrot and stick that we have and we should appreciate. The stick being the obvious piece, which is litigation. But also through the potential for that, encouraging good behaviors, which includes engaging in public education. So back to one of your earlier questions, what do we do now in terms of the condition of homeowners right now? Part of what we're going to need to do, whether we reach a settlement or decide to file and go that route, is we're going to need to educate the consumers better about what their rights are, how you go about getting a relief for your, in terms of a foreclosure process, how you navigate the modification system so that you can be informed. And that then is work that is about collaboration with community organizations and with other government agencies.
And as you mentioned early on, education was one of the problems that got us into this issue and will be needed to get us out. And how do you see the Attorney General's office playing a role in terms of educating the public?
So I see my role, first of all, I love my job. I really do. It's great. And, I see it as having three components. And so there is the component that is about the statutory and kind of technical role of the office, right, which includes litigation, advice of clients, which are state agencies primarily. There is then the bully pulpit, You know, I mean, it's an opportunity like this, right, where I have microphones attached to me and there are press people in here and,
Right.
and they're, you know, and, you know, they'll write what they want,
Yeah.
but it's an opportunity at least to explain the perspective that we have about an issue. And then there is also a third component to it, which I think is really, can be used much more, which is the power to convene. You know, when you hold an office like this, a lot of people take your call. And I've had the experience countless times where I just call up a few people and say, come, you know, meet around my conference table for an hour and let's address something. And invariably, those folks have never met with each other before around the issue, but they all want to participate. And
Can you
break
give
the
us some
silos.
examples of,
Yeah, I
of
can-
groups that you've convened and maybe some that you'd like to be convening
I mean,
in the
yeah,
next few
yeah.
months?
So thank you. I mean, I can talk about it around the work that I've done in criminal justice, certainly around reentry, for example.
Right.
Bringing together the Chamber of Commerce with labor, with faith-based folks, with nonprofits around the reentry of low-level offenders and how we as a community can collaborate and around resources, especially in these times, and focus. So that's happened. We've done some of that work on the foreclosure issue, which is bringing together folks from consumer advocacy organizations, again, faith-based folks. I'll tell you that 50% of the people impacted in California by the foreclosure crisis are African American and Latino, even though they're only 20% of the homeowners in California.
Now, what was that number again?
50%.
Wow. That's
So
incredible.
yes, and you can look at that, you know, and there are many explanations, which, you know, when you look at, for example, in immigrant communities, because the documents are in English and someone's translating it, and, you know, translating it in a way that they want to just get the person to sign. So anyway, there's all of that, and it's about then bringing together community leaders, bringing together. I've met, for example, with some of the big accounting firms who are very interested in participating around a financial literacy push, right? So, you know, and in my experience also on that point, I want to emphasize, I think, the importance and critical value of public-private partnerships and bringing together the private sector along with these, you know, public and NGOs and community organizations to focus on this. You know, it's also been my perspective that a lot of leaders in business also consider themselves to be leaders in the community and want to participate in addressing an issue. So those are some examples.
Well, that's exciting. One of the questions from the audience that came to me beforehand, which I'll just paraphrase slightly. You know, you mentioned the large numbers of homeowners are underwater. And as I go around the state and talk to people, and even when I was in Washington talking to some of our congressional offices, you know, there is a sense that, you know, maybe banks are less willing now to make loans than they were in the past, particularly to people who were underwater. And one of the questions from the audience was, do you think that banks will, you know, be lending to people who are underwater, helping them refinance, and what should they do?
Well, when I look at this most recent report that says that there's been an acceleration of foreclosure filings, I'm a bit concerned.
Yeah, it would seem to be
And
indirect evidence, at least, that maybe people aren't getting to refinance.
Correct,
low interest rates.
and I would hope that there would be an effort, at least, to I would hope that there'd be some collective desire to allow people who can afford to stay in their homes with the renegotiation of the terms, that there would be some desire to allow them to stay in those homes, and that it's not just about pushing some stuff off the books.
Yeah.
I'd like to believe that this is not just about the bottom line, and that instead there is some collective desire to do what we can to create stability in communities, and understand that we don't have to accept a false choice that tells us that either you're going to have financial stability or you're going to have these homeowners have stability in terms of being able to stay in their homes. There's a way to do both.
Yeah. And is there, so that would be part of the negotiations, I assume. Is there also a role for legislation at the federal or
No
state
doubt.
level?
There's no doubt. I mean, you know, the HAMP program was meant to kind of save homeowners and allow them to stay, and it's confusing. It's confusing to the homeowners. The system and the various players are not talking with each other, And so again, this is where I've seen very good progress in the multi-state negotiations around those reforms and what they could look like. And again, I want to emphasize that whether or not we reach a settlement, I would hope that the banks would implement those reforms
Yeah.
because it's just the right thing to do.
Yeah. Are there 2 or 3 reforms in particular you think that would make a big difference for improving the housing situation in California?
Yeah, I mean, well, okay, within the context of the dual track, the mortgage and the modification, one of the simple points is notification. Just notification. Just notifying the homeowner that the foreclosure is about to happen, or that so that they can then deal with the modification piece. I mean, that's one simple point, notification. Then there is the other point of just in terms of legislation, to your question. There's been some good legislation, and more can be done around, for example, prohibiting brokers from collecting a fee before they have added any value to the condition of the client who is the homeowner. And I think that's important because, again, that just is about trying to eliminate the predators who end up taking a lot of cash from these homeowners that otherwise could be put into their mortgage.
Yeah. One question that I had about the nature of either a multi-state agreement or whatever litigation might come out of your strike force, and that has to do with what the nature of the settlement might be like, because we, and I know without talking details, but we talk about helping the homeowner, and then at the same time, I've seen some accounts of the multi-state agreement describe it as like the tobacco settlement statewide. So is this because there might be a range of outcomes or different types, or what can you tell us about the nature of relief that might be possible through different types of agreements?
So the multi-state, as it has been proceeding, has been with the design has been to reach some collective agreement that everyone would sign off on. And it has related to everything in terms of eligibility. So if there is a pot of money that is agreed on as the amount of money that the entire country would receive, and then there'd be some calculation and equation about what piece of that each state would get. Okay, so there's that conversation. There's also the conversation about eligibility in terms of access, in terms of the individual homeowner, right? So let's say, I'll make it more simple. So let's say we're talking about a one number that is for the entire country. Then there'd be a calculation about what California could take. And then there would be criteria to determine which homeowners could have access to that money.
Got it.
And that criteria would pretty much be the same for every state. And so what I'm looking at is in the discussions that we're having and the numbers that are being proposed, whether the number of Californians that can receive relief because of the dollar amount and because of the criteria is commensurate with the harm and the numbers that are actually in need of relief. Now, I'll tell you the thing that is difficult about this process for me. It is a situation of being engaged in a settlement discussion where you know that if you agree to the settlement, some people for sure will be helped. But is it an adequate number to justify cutting the deal?
Really, when we're talking about
And
such
when
a
you're
big
talking
number.
about real people who I have met in Visalia and Fresno and all of these places.
That's right. Yeah.
And so that is why I've been taking it so seriously
Wow.
and engaged in these conversations for so long.
And how
Because,
do you-
and then the other topic on the table, by the way, which we haven't discussed in any detail, is is the issue of releases.
That's right.
Okay, so
Tell us
again,
about releases. 'Cause
right.
that's-
So we're
that's
looking at all of these different categories of the life of the loan, from the securitization. So this is where we're talking about the fact that the banks would basically cut the deal in terms of the mortgage and then package up loans and sell them to investors. And then the question is, what were the investors told? What were the representations made about the health of those packages and therefore those loans at the time they were sold? So with some assumption, for example, that there would have been due diligence in determining that the homeowner who was given the loan was of financial health to be actually able to pay it back, right?
Right.
So there is that question. There is the question, as we discussed, about origination. So at the time that you sat down, homeowner, what was represented to you about the terms? And and was that true or was that false? There's a whole other thing about false claims, and there are statutes in California that address very specific client or consumer population, which is the state, because many states also invested in this. And so there are specific rules about how you negotiate with a state entity and the requirements of honesty and all of that. And so there is that. There is the issue of servicing, okay, which is mostly what we have been, what has been on the table, and that's the robo-signing piece. So you're going through the process of a mortgage, for example. You're going through these processes. Has anyone exercised due diligence to actually look at the papers and look at your situation and figure out whether these terms are correct? Have you been foreclosed on when in fact you were, eligible to stay in a house? Who owns the loan? Who owns the loan?
My gosh, did you think you were going to be getting into all this a year ago when you were running for office?
There's, you work, I work often with understanding that I should just always work with a hypothesis instead, instead of, any strong idea, because it's life is wonderful that way. Things change.
Well, and one thing that we enjoyed about meeting with you a year ago was that you are a data-driven person.
Yeah.
We can tell when people come in and they want to read reports. They want to know what the facts and the evidence is, and this is a behemoth issue, and it's going to be critically important for the Californians in various stages of insecurity about their housing, and critically important for the recovery of our economy. I mean, personally, I don't see how our recovery takes place until some of these issues are resolved, which is why time is of the essence at the same point. I was curious about your interest in Visalia and the Central Valley. Is that as well as noting the disproportionate number of African Americans and Latinos who are in need of relief in terms of housing, their housing situation? What are you seeing in the Central Valley compared to here in the San Francisco area?
Oh, they've been so badly hit. I mean, on the list of cities that were hit and regions, Fresno, it's San Bernardino and Riverside, it's Stockton, it's Modesto, and they've been badly hit, and where you have whole communities that are just devastated.
And what are people telling you that they need when you're in the Fresno area? What do they need from you?
It's an interesting mix, and it gets back to even the case I was telling you about where we're now suing and litigating against that law firm. There's a combination of despair and anger. And that's an awful place to be.
No kidding.
Right? Where people don't really know what's going to happen next. They don't know what happened to them.
Yes.
They're angry that it did, and they want to know, and I get this rightly, they want to know that there's going to be consequence and accountability for wrongdoers and bad behaviors, and they also want to know there's going to be help available to them. I hear it everywhere. People want to know that there's going to be some consequence, and that no one is too large or too small to have to be accountable for the truth and be a part of a truth-seeking process, and also do what is necessary in terms of acknowledgement and restitution.
Incredible. So this is your first year as the state attorney general, not your first year in position of similar responsibility that you had in San Francisco, how are you thinking about this term and measuring success for this term? If you look, a few years from now, how should we measure the success of the attorney general?
Kindly.
Okay. Fair enough.
So we all are perpetually, and I am always faced with, there's so much that I believe I can do, there's so much I want to do, and there's only so much I will get done. I say often, I will not end world hunger.
Mm-hmm.
Like I promise you, I'm not pretending to. It won't happen. Okay. Triage.
Mm-hmm.
I've learned to reluctantly embrace.
Mm-hmm.
Limited resources, so much to do. If you're going to get anything done, you have to pick off a few things. Mm-hmm. And hopefully everyone will understand. I think all the other things I didn't pick are also important, but I got to start somewhere.
Okay.
The work that we're going to do on mortgages, I think, will be significant.
Mm-hmm.
I think I feel that way so far, that it's been significant and meaningful. Mm-hmm. We're doing some great work around what can be done around technology and embrace of technology and innovation, but also looking at privacy issues and things of that nature. We are, I'm very supportive of what the governor is trying to do in terms of the realignment process and rolling that out in a way that it's meaningful. And so, the thing that I've worked on forever, which is criminal justice and the need to take that seriously. There are a lot of areas of focus for us. Environment is a big one. Mm-hmm. I'm engaging in a whole effort around just basically the emphasis on the impact of crimes against the environment on the health of communities. Mm. So, for example, I've been hearing for years about this little community called Miraloma that's in Riverside County. Right. And it's a community of a Latino community of families who've been there since the 1930s, 40s. Mm-hmm. Probably half of them monolingual Spanish speaking, about 101 homes. And over a period of time, warehouses have been building up around there, and these diesel trucks, mm-hmm. hundreds. And I actually had a meeting with some of the police chiefs and DAs and folks in Riverside, and I said, well, while I'm there, let's just go see Miraloma. And you go there, and your eyes just, after 5 minutes, red, hot. You could have you ever been where you can taste pollution? No. Like you could taste it. Wow. The children in that community, stats, have reportedly the lowest rate of lung development of any children in Southern California. Just awful.
Wow.
And so, we started looking into the case more and more and decided to file suit and join, because what was happening is that there was a development project that should have gone through a process of taking more seriously the health impact of that project. And then it's not about killing that project, by the way, mm-hmm. but just let's make sure that we put meaningful mitigation and alternatives in the plan to not harm that community anymore. And, this is the other thing I'm finding, especially because of the economy of our state, that we have to be committed to not accepting false choices. Mm-hmm. Because in this economy, it's really easy to suggest these false choices and have everyone gobble them up. Mm-hmm. It is a false choice to suggest that if you are pro-environment, you are anti-business. Mm-hmm. Sure. It's a false choice to suggest if you are pro-consumer, you are anti-business. Mm-hmm. I am both. Mm-hmm. I want business to thrive in our state. Mm-hmm. People need jobs. Mm-hmm. And we can do both. Mm-hmm. And so...
So what do you love most about your job right now?
I'm almost everything. I mean, it's. I was telling you, sometimes I'm on 6 planes a week. It's like, I just, because it's a big state, and a lot of people to see and talk with, and but I have a great staff. Mm-hmm. And I've been, a lot of what I've been doing is also spending time with the people in my office. Some of them, who I did a reception when I first got there in every office, so I could meet everybody, and shake their hands and thank them. And I met people who, I'm their 5th AG, so talk about feeling small, right?
Yeah.
They've been there, they've seen it all.
Yeah.
They've been working hard every day and doing the work, and really good people. And so it's, a combination of things.
Fantastic. Well, we really thank you for being part of our 2011 speaker series.
you.
And I want to make an invitation for you to be part of our 2012 speaker series.
You
So
got it.
maybe we'll come back and talk
Thank you.
about something else, but thank you for
That's
being
right.
here
Thank
today.
you. Thank you all.
And I want to thank everybody who's been here for being in our audience tonight, and want to remind everybody that we have a very nice reception that will continue after we get off the stage. So stay around, visit, talk about public policy. And this has been hugely informative for us. I mean, we covered so much ground. This is such an important issue, and I
It
really
is.
want to thank you for taking the time tonight.
Thank you, Mark.
Thanks so
Thank you.
much.
Thank you.
And
My
best of
pleasure.
luck.
Thank you.